Hey, good morning folks, my name is John Needham. I'll be your host for today's Danielcode Report, which is coming to you at the start of the new month. It's the morning of 1st of May in Australia. The charts for this tutorial as usual are available in the link at the right hand side of this YouTube video or at the Danielcode, www.thedanielcode.com. I ask that you go and get those charts and print them out so you'll be able to follow our adventures in gold and silver in the last 7 or 8 days, and they've been very nice, very extraordinary. I continue to maintain, and I think it's fairly obvious now that, as I said last year, gold is likely to remain in a large trading range. It will be a trader's market. We have picked almost every turn in gold since the March high last year. And traders continue to profit in this market, while those waiting on the moonshot that the fundamentalists continue to promise may get it one day, but there's no evidence of it at the moment. This market generally, though, is remaining very strong. It's up in its upper areas of its trading range, so it does continue to be strong. Well, let's go to the charts now, and the first one is of the COMEX gold chart. And what we're looking at here is the recent activity in our trading books on gold. You will see on April the 20th that we had a buy signal, a TO3, our proprietary buy signal in gold. That was duly elected, and the market charged up in 5 days into the $917 mark, which is the Danielcode resistance target. And that trade was worth $52 or $5,200 per one COMEX contract. We then got the TO3 sell signal on April the 24th, and down it went for 32 points or $3,200 per contract. So in those two trades, there's $8,400 per one COMEX gold contract. If you're a gold trader, these are must-get trades. You simply got to know where these turning points are and what the signals are. I'm not suggesting you'd have got every tick of that, but you certainly should have got some part of it. Chart number 2, we're moving on now. It's the same chart, COMEX gold. I'm now showing you a 720-minute chart. The 720-minute chart in gold divides the market very nicely into the European session and the US session, and we often see conflict between these sessions in the pricing, and that gives us great trading opportunities. As usual, I've shown the trigger bar on the shorter term charts in a blue rectangle, and you can see on chart number 2 that at our TO3 buy signal for Monday, April the 20th, you can see that little inside bar did a reversal. It's the one in the blue rectangle. You can see underneath that the stochastic, the fast stochastic, which is the 533 stochastic we use on these shorter term charts, was turning, and your entry on the shorter term chart was to buy the high of that bar plus a couple of ticks, and that would be somewhere around about 876, and off it went straight up to that 917 bar. As this market made its high for this particular piece of chart on the 24th of April, we got the sell signal for gold. And the day after, which was the Monday, we got another TO3 sell signal in silver. So I've told you before, these markets are all highly correlated, the precious metals markets. If a TO3 trade entry signal is elected in one of them, it will likely be entered and elected in the others. So you can take a gold signal executed in silver, or a Huey signal executed in gold, or a silver signal executed in gold, whichever you like. They're all interrelated. If one is elected, they will likely all be elected. If you don't understand what elected means, I ask you to go to the Danielcode website, have a look under the videos tab, and you'll see a great number of videos on trading, one of which is called TO3 tutorial. It's highlighted in bright red, you can't miss it. Go through that, it'll show you exactly how to trade these TO3 signals. So that shows you how we got a much earlier entry on these markets on the 720 signal, and all you have to do is put your order on. Chart 3, we're taking this now down in a little bit more detail to the 240-minute chart in gold. And what I've done here is I've gone across and I've shown you how the stochastic oscillated in and out here in the setup to the 240 entry. So we had the red rectangle represents the period that the TO3 signal was operative. And you'll see if you follow all those charts up that they're negative, positive, negative, positive. That's the stochastic doing its funny little oscillations. But as we get into the high, we have a positive cross, so that's not giving us a sell signal. Then we get a little inside bar. This is on April the 27th. We get a little inside bar. The stochastic has gone negative. We sell the low of that inside bar minus 2 ticks. So you'd be into that trade at 914.80, which is considerably better than the daily entry. But for those of you who are not full-time traders, the daily entry is still very rewarding, but this is for those who can spend more time trading. The 720 option is good. The 240 option, if it sets up, is good. Excuse me, that's how that went. Chart number 4 is the silver chart. I make the point to you again here that on April the 20th we had TO3 buy signals in gold, GLD and the Huey. So you could have executed those either in gold as we've just seen, or you could have executed them in silver. They mean the same thing. And that market took off from its reversal at the Daniel number, went up to 1322, the Danielcode resistance target, 1370 ticks up. Same deal, we got the TO3 sell signal for you to execute on Monday the 27th. You executed that. There's some part of 880 ticks in the down move. So these are very, very valuable moves. If you look at the stochastic that's underneath this particular chart, you'll see that as the market reached its high on the 27th, the stochastic had hit the overbought area. That's the signal for you to tighten up your stops and invite the market to stop you out. And then look for the TO3 reversal signal, which came right on time. Chart number 5 is the same signal, same chart on silver. It's the 720-minute chart, exactly the same methodology. I'm showing you there how to execute these signals on the 720 chart in silver. Chart number 6 is the Huey, and I'm pointing out to you there that we had a TO3 buy signal in the Huey on April the 20th. Up it went. We had a TO3 sell signal in gold on the 24th, and then another one in silver on the 27th. Now, if either of those signals are elected, the Huey will move with them. It's an index. It will follow the primary markets, and that's exactly what it did. So there you are, folks. There was a great opportunity for some part of $8,200 per one COMEX contract. For those of you who trade gold, GLD, I know a lot of our members now do, it just follows exactly the same signals. It was a very profitable week, and if you didn't get those trades, think about going to the Danielcode and learning how to execute the TO3 signals. They are a source of great success to our traders, and you'll see some postings on the homepage there of just what our traders have been achieving lately. I hope you've enjoyed this video. I hope it's directed you towards how easy it is to trade these markets. Once you have the Danielcode TO3 signals, you'll be set on your way to an understanding of where and why markets turn.
The day the music died, I started singing bye bye Miss American Pie. Drove my Chevy to the levee, but the levee was dry. Them good old boys were drinking whiskey and rye and singing, this'll be the day that I die. This'll be the day that I die.